Hi, it's Joe Mazumdar from Exploration Insights at the pre-PDAC Metals Investment Forum in Toronto. And with me right now is Christian Easterday. Christian is the Managing Director of Hot Chili Copper, ASX, but now also Canadian listed and also with an OTC, I believe, in the States.
Correct.
And so Hot Chili is sitting on like close to 1 billion tons of, 0.5% copper equivalent?
Correct.
In Chile. So give us a bit of background on this project, because this is something you've been working on for quite a while.
That's right. Well, really good to be with you, Joe. We started putting this project together back in 2008, listed the company in 2010.
Global financial crisis time.
Correct. So timing is everything is a slogan of Hot Chili. Sometimes these things can be seen in the fullness of time. But I know we listed on the ASX in 2010, had a great discovery, but at the end of the last copper cycle. And, the company is known...
So this was a grassroots discovery.
Correct.
Yeah.
And a consolidation play from the beginning. Low altitude, next to the infrastructure that you need to build large copper projects. Yeah. Great discovery. And then a company that was able to survive really what was a mass extinction event with the copper price getting hollowed out to less than $2 a pound, and really the Australian market losing most of its copper development sector. There were 3 companies that emerged out of that in 2019, Hot Chili being one, and since then we've really reinvented the company. We brought in a private discovery 14 kilometres away on the other side of the Pan American Highway that's transformed the company's resource base, quadrupling it to near on 1 billion
tons. So Costa
tons.
Fuego is several different projects?
Exactly. 2 primary large-scale copper deposits sitting right next to each other and right next to a port and all the infrastructure you need to develop. So what we've built now is really a very, very unique large-scale copper development option for the market. It's not up at 4,500 metres in the high Andes. It's one of the only projects that is sitting at low altitude at an advanced stage that can be developed in the near term. In fact, ourselves and the Jose Maria resource that was taken over by Lundin are the only plus 100,000 tonne copper projects that can be brought into production outside of the majors by 2028.
And what's interesting is Los Azules probably doesn't fall into that category, but it was the one that was recently, supported by Stellantis, a consortium of car companies.
Yeah. So we're seeing some very interesting things in the copper space. I've just attended the BMO conference where 60 to 70% of the people undertaking the surveys were picking copper as really the next lithium. So we've had a couple of commodities that have really dramatically re-rated and been behind the biggest amount of value creation in this industry over the last 20 years. It was iron ore in the beginning of the early 2000s, with iron ore prices going from $20 to $200 a tonne and then back sitting at 80 to 120. Lithium in 2016 and 17, both yet really unloved and unknown commodity spaces that dramatically re-rated. And now we're sitting potentially in front of a copper surge. So when you see things like car makers going downstream into development projects, and as you say, not as developed as Hot Chili in terms of permitting advance, it's exciting for the sector.
But at BMO, I understand that there was a lot of car companies actually attending.
Correct.
Conference.
Correct. We saw Mercedes and other groups there, and it was a very, very healthy sign for what's about to occur.
And they added critical minerals to the title of the actual conference now.
Correct. Exactly. So copper being the critical mineral that really everything relies on for the electrification of the world. How we're able to supply another 7 to 13 million tonnes of potential copper for this market that is going to be required is extremely difficult to see, just as it was difficult to see lithium having an elastic response or iron ore having an elastic response. Large-scale copper projects, and there's only a handful of them available outside of the majors, they take 20 years to bring through to production, and they're very capital intensive. And so Hot Chili, with a 13-year head start on most of the developers, we sit in a very, very, opportune moment.
What I find right now is that there's less financing risk, it seems, for these big development projects because there's money out there to develop them, but it's got to be the right project. Because we're seeing, like for lithium, we see a GM go 700 million into Thacker Pass. We see the Department of Energy going into some nickel projects in the States, but there's no link there to whether that project can actually be permitted. What is the advantage of Chile that we all had in our heads back in the 90s when I worked there, and now that Chile seems to be a place that people are avoiding because of risk?
Yeah, well, I think the last 2 years, you would be right in saying that Chile was, part of a chorus of concern coming out of LATAM, with a lot of governments pushing towards the left, and a lot of resource take discussions going on in Peru and Ecuador and Chile. But what really differentiated Chile, in my opinion, and we're dealing with the top 3 mining jurisdiction in the world. Canada, Australia, Chile have always attracted the lion's share of investment in the resource space. And Chile went through a constitutional discussion. For 2 years, it went through a taxation discussion, much the same as Canada has gone through and Australia has gone through. All of those countries passing with flying colours and really focusing on resources as a real powerhouse of those economies. And Chile's just gone through that same step. So at the end of that, we end up with a constitution that is unchanged. The constitutional process was voted down by 62% across every state of Chile. Boric has returned to a very centrist approach, and pro-invest Chile policy is out.
And he's got an
out there.
approval rating of like 20% or something like that.
Yeah. So look, you have governments that come in on populist idealism, but then countries that are very well advanced, like Chile, who just retained its #1 economic rating for LATAM yesterday, they have embedded security mechanisms. And for Chile, it was a requirement for a 2/3 majority to be able to pass any constitutional change or taxation change. And that is ultimately acted as a safety blanket for the country to retain its economic status, and it's really positioned as a friendly investment jurisdiction for mining. And what we see is ourselves and the rest of the mining sector in Chile, are very happy with how that process has gone. We're moving towards a discussion on taxation change that will probably equate to Chile in total effective tax rate, probably coming up and joining Canada and Australia. It was always 2 to 3% lower effective tax rate.
Right. And that's why some people are waiting before they make major advances in brownfield expansions right now until that tax stability.
Certainly. What was important over the last 2 years of that entire taxation change is nothing actually went through Parliament.
Yeah.
Not one of those bills, because they never made it and they could never garner 2/3 support. So we're going through it, I believe, the third review and moderation of the bill that is being prepared. And I believe that most of the sector is very happy with what we're hearing.
So let's go back to the project. You're sitting on 1 billion tons, 0.5%. So how are you advancing that? One is a development story, but I also understand you've also got a drill program as an exploration story. So let's talk about both of those.
Yeah, correct. Well, look, Hot Chili finds itself in this enviable position that we were in a foot race against ourselves to bring on a plus 100,000 tonne per annum copper project. This is very large scale. And we reviewed our strategic options at the end of last year. The market was not exactly cheering on development expenditure with the macro and economic environment and concerns. There was a lot of risk-off behaviour.
And
perhaps
escalation. And
developers got punished a little bit harder in the market than those were just focused on drill bit beta.
Yeah.
So what we had was an opportunity that we're about to take another step forward in our continuing consolidation of this entire part of the coastline. And we were able to pull off a transaction with Antofagasta Minerals. And that has given us the other side of the tenement boundary right up against our major Cortadera porphyry discovery that's transformed the company's resource book. We now have the entire deposit footprint to play with, and we've pivoted towards a growth phase this year. And really our strategy in a nutshell, we have the opportunity, we see, to upscale the resource rapidly to well over 1 billion tonnes to support a potential expansion of our pre-feasibility studies that we completed to 80% last year. So we can potentially upscale this project towards 150,000 tonnes per annum. Now that would make this project the largest copper development outside of the majors, and the only one that can actually probably be developed because of our permitting advance over 10 years in a reasonable time frame.
And so in terms of that throughput, how much of that would be open pit and underground? And is it sequenced, or how does it work?
Sequenced. At the moment, with the option that we're looking at, we have a 20 million tonne per annum sulphide concentrator being studied along with an oxide project, but roughly putting out about 90% of the copper in concentrate. So they're primarily from 2 large-scale open pits, 14 kilometres apart, Pan-American Highway running right through the middle of our projects, and 50 kilometres from port. We'll be employing central processing at 800 metres altitude right next to our high-grade 2.5 kilometre long open pit where Productora will be developed. And then Cortadera will be fed in via rope conveyor, allowing us very ultra-low transport costs.
Because it'll be going downhill.
Exactly, by 200 metres.
So generating power almost. Yeah.
Correct. And it means that we can get exceptional transport costs of around 20 cents US per tonne delivered to the mill.
So power, you'd be grid because you're infrastructurally very close?
Correct. So we almost have a hit list of all the permits you require to build a mine. It took us 10 years to secure a maritime concession for our water rights. Uniquely, our projects are going to be processed using raw seawater because our copper recoveries actually have 2% better improvement. So on a capital perspective, in terms of the cost to build this project, it's about half the cost of our peers in the high Andes.
There's somebody else that does that right now, Antofagasta, on one of their projects.
Antofagasta, some of their very large projects are seawater, Las Palambras.
So I was just in Egypt with Sukari, and Sukari uses seawater from the Red Sea.
It's actually surprisingly quite common.
Yeah, and also with respect to permitting and water access, which is a big deal in Chile, going through whatever a 10 or multi-year drought, that to get water out of the picture in terms of a disputed resource is good.
Correct. And Hot Chili, made a conscious decision over 10 years ago to go via saltwater processing. No $500 million desalination plant to build, no $500 million water pipeline to get water up into the Andes. Yeah. The project's missing $1 billion of capital. This would be a $2.5 to $3 billion project on peer metrics up at high altitude. It's a $1.3 billion project.
And that desal plant would require even more power.
Which makes it energy intensive. And so outside of water rights and the fact that we've now been given the final terminal connection to the central grid and the main base station 17 kilometres away. So we have power, we have water, we have the easements to establish the infrastructure, the surface rights. And the last element, which is going to be extremely unique, is we are negotiating a port agreement for the nearby Las Losas port, sitting immediately next to the project, 50 kilometres away. And that final piece of the puzzle will have Costa Fuego, this large development hub with its own port dedicated. So that will basically have cleared the entire pathway to submit our environmental impact assessment in the first half of next year with our scaled up pre-feasibility that we'll spend the last bit of money on putting finishing touches on. But this year is all about drilling. We started drilling in January.
So how big is that program?
A 10,000 metre drill program, just doing the initial first pass across 5 new large targets in this expanded porphyry cluster. Correct. Cortadera has 3 porphyries along a 2.3 kilometre strike length. Now we have another 5 large targets available in what looks like a classic large-scale porphyry cluster. And so that's exciting for us. 7 days ago, we released our first drill result and confirmed a 4th porphyry has just been added to Cortadera with a 120 metre intersection to end a hole from surface with high-grade 1% copper, 0.5 gram gold enrichment. So it's a very promising start. It's going to be exciting this year what we can do.
So how are you funded to deliver, these catalysts over the next 6 to 12 months?
Well, we managed our capital quite well. We were pulling off of the accelerator last year and starting to conserve cash for this push this year, which we knew was coming if we could pull off this deal. And we've done that. We've finished the end of the year with 11 million in cash. We sit with about 10 million in the bank.
Australian.
Correct.
Yeah.
And what that really does is fund the 10,000 metre program, allow us to deliver our PEA into the market in the first half of this year on the existing scale that we've studied. Now that PEA will be almost a pre-feasibility. It'll be based on all of the pre-feasibility advance for the past 18 months. And then that will be followed by a resource upgrade in the second half of the year, followed by our planned pre-feasibility completed at the final scale. And that will give us the ability to submit our environmental impact assessment on the optimised project scale. You do not want to submit an EIA to the government at 100,000 tonne per annum scale and then come back a year later and say, oh, we want to change that.
Yeah.
So
You can
that is
modify down, but you can't modify up.
correct. Yeah.
All right, Christian. Thank
Really
you very
great
much.
speaking with you, Joe.
That's me, Joe Mazumdar. I'm with Christian Easterday, Managing Director of Hot Chile, which has a large porphyry play, copper play in Chile. So that's me, Joe Mazumdar, Exploration Insights at the Pre-PDAC Metals Investment Forum in Toronto. Thank you very much for listening.